Hello and welcome to The Trade. Now let's get to the charts. Kicking things off in the US as investors eagerly await core PCE data out this week. Peter McGuire from XM joins me now live via Skype. Peter, good morning. Thank you so much for joining us.
Lovely to be here, Danielle.
Okay, we had a little bit of an inflation scare in the US in the January numbers, but let's have a look at your chart. Do you think the PCE is going to be, well, pretty much discounted, the number that's expected?
Well, I think so. And I mean, the chart tells the story in a lot of ways. Core PCE, and it was sitting at around about 3.9 in January. You're looking at the big picture, Danielle. We're thinking it'll probably pull back a fraction. And the stickiness of the inflation story, if it takes a lot of that stickiness out, then that's going to be a good sign naturally for rates and the consideration moving forward. We've just got to see how it all rolls. But there are some outliers there, and when you're looking at the big picture as far as rents and so on, it's certainly causing much concern for consumers globally.
Absolutely. Of course, if it does come out stronger than anticipated, we could see flow-on effects into the currency markets. Oh, there we go. Let's just have a look, though. There's the actual PCE inflation one. Anything in that chart that's catching your attention?
Well, absolutely. And building on what you just mentioned, I mean, if it shoots to the upside and it is a surprise, then that's going to probably underpin the storyline as far as US dollar and the impact it's going to have naturally to the bond markets. And you won't probably see a rate cut till possibly late summer. And that's, the best part of 5 or 6 months away. So the impact naturally, one would think, would be a stronger US dollar, bond rates up, and then how that plays against other currencies like, the yen and naturally the euro and, everyone else in there. The yen's been outstanding this calendar year, in the sense of the last 2 months, up 6% against off 6% against the US dollar, Danielle. So it's been, if you traded one market, that was one market to, dial in on over the last 8 weeks.
As was my understanding, isn't the Japanese CPI due out as well?
Yeah, that's coming out. We've got those numbers to drop this week. So, yeah, keeping a close eye naturally on that. You've got some points there as far as I think the wage side of things and inflation. So, yeah, all of that impact. I mean, you can't take your eye away also from the strength of the Nikkei, what we've seen back at those high or taken out the highs of 89. So, yeah, wow, it's just been extraordinary, the Nikkei 225 as well.
Absolutely. Let's have a look at the US dollar euro and see what's been happening there. And what are you thinking, Peter?
Well, I think at the moment it seems to be a bit choppy. It's been a nice market to trade, Danielle, because of the concerns as far as the weakness across the eurozone. What's going on there if they see a rate reduction sooner than or off the mark quicker than the US? And I wouldn't be surprised for that to happen, considering the fragility and the austerity measures that are about to be dialed in for Germany. So the economic powerhouse of Germany is under the whip, and it's really going to be a very tough year for them. Probably even into 25, it's going to be very bleak. So I think that will capture the US strength against the euro, and probably around that 103 to 106 sort of handle. Keep an eye out. It's currently sitting at the best part of 108.60.
Okay, and let's have a look at gold, because we have well, it hasn't really broken out or broken down too much, but those US Treasury yields, if anything, they've been backing up. So it hasn't really been, I suppose, a tailwind. It's been more of a headwind.
It has been. It's been ping pong. I mean, it's been choppy, Danielle, and the gold market. It's up at 2070, and then it gets sold off, and then it hits the bottom at 2010, and then it rallies back up. So it's creating plenty of opportunity for traders for short term, that is. And I just think that probably, again, its best days will be ahead of it once we see a clear indication as far as bonds, what's going on with inflation. And you've got to keep a close eye naturally on Bitcoin also at over 54,000 now. That will probably, it might be they're off to the races, and I wouldn't be surprised for gold to follow suit in 24.
Okay, fantastic, Peter. Well, we'll all stay tuned for all these inflation readings this week. Thank you so much for joining us.
Thank you, Danielle.